What's up everybody? Welcome to the Stocks channel. My name is Cory, and today in the stock market we see a pullback from the 20 simple moving average, but we are seeing a divergence in risk on assets. First up, let's take a look at the S&P500 SPY ETF. So let's crack open this chart and see what's going on in the stock market today. Alright, today in SPY we were down 1.03%, and we did see a sharp rejection from that negatively sloping 20 simple moving average. And that is definitely going to be an area that the bears are going to show up, because the bears do have the benefit of the downtrend, because we are still making lower highs and lower lows. And that is a very good risk reward ratio for bears to short at that level. Now keep in mind, if we want to see an end to the downtrend, we are going to need to see a higher low followed by another higher high. And that is going to be the price action proving to us that the downtrend is ending. So right now, if you're waiting to get bullish, you need to see price action bouncing from any of these support levels below and then coming all the way back up to break out above SPY 380. Above 380 at this point is going to look like a higher high after a higher low, and nothing else will tell us the downtrend is ending. So that is the number one thing you need to watch in the price action. Remember, you need price action to prove everything to you, and it's not about guessing what's going to happen. Make the price action prove it to you. In other words, we need to see SPY breaking 380, otherwise we are still in the downtrend. And while we are still in the downtrend, there is still the possibility SPY is trying to get to 350, and this is just another lower high before the next lower low. So if you're going with the direction of the trend, you are still expecting SPY to see lower prices until we get that confirmation of the breakout, which is now going to be above 380. The next downside price target is very likely going to be this gap fill at 368.55, and below that you have the June closing low at 365.86. And then we have the 200 simple weekly moving average, which is our most critical risk level at 358. As long as we're getting weekly closes above the 200 weekly simple moving average, it is still possible we are indeed in a secular bull market. But once we start breaking down and closing below that level, then we do have to start considering the possibility we are entering into a secular bear market, which is going to mean we have a lot more downside likely coming. So in the event we get down to 350 on a daily chart, but still bounce back over the 200 weekly moving average on the weekly close for the weekly chart, that still counts as support holding on the weekly chart. So there's a lot to pay attention to right now, but it's mostly going to come down to discipline and patience, because you have very well-defined risk levels, and that is going to be SPY 380 resistance. If you're shorting as a bear, you need to start thinking about exiting your short positions if SPY starts breaking above that level. And as a bull, you need to manage a risk from down here right around SPY 358, and everything in between is going to require us to see more price action to know where we're going between 358 and 380. On the NASDAQ 100 triple Qs, we were down 0.79% today, and the triple Qs also had that perfect rejection from that resistance and the negatively sloping 20 simple moving average at 284, which is exactly the area we expect bears to start showing up. So in the event we are going to break the downtrend, we need to see that higher low followed by the higher high, which is now going to require the triple Qs to start breaking above 284, because that will tell us we have the higher low, higher high. Now in the event we continue lower and we break down below the 5 EMA, look for the gap fill at 275, and then the support levels at 271 and 267. If we break all of the support to the downside and we start making new lows, you are looking for the price target at 258, and that is more in line with the downtrend of lower highs and lower lows. And as you can tell, we are still in the downward trending channel on the triple Qs. So it's a downtrend until it's not, so make the price action prove it to you, and that's going to require the break above 284 and the resistance trend line at 286. On the Dow Jones, we were down 1.18%, and again, the Dow Jones also got rejected from the negatively sloping 20 simple moving average and came right back down to the support just below 299, and below that support, we're likely filling the gap at 296.37. Below that, we have support at 293 and the low at 287, and we still have the weekly gap to fill at 285, so don't rule out the possibility that we do go down there to fill that gap before we can say that we're done going lower in the Dow Jones. If we continue lower than that, we could still get to 276, so there's always more downside while you're in a downtrend until we see the downtrend breaking. The breaking of the downtrend in the Dow is going to require a break over 305, which is also going to be the resistance trend line. On the Russell 2000 IWM ETF, we were down 0.56%, and again, it sounds like a broken record because we see another rejection from a negatively sloping 20 simple moving average. So that is exactly where the bears are showing up, and that is a very good risk reward ratio for short sellers. IWM is going to need to break over 175 and the resistance trendline at 177, with the critical risk level just $1 higher at 178. To the downside, look for the gap fill at 170.3 and the support levels at 168 and 163.75, with the next leg lower being 159.5. On the ARKK ETF, we were up 0.32% today, so we definitely are starting to see a divergence in risk-on assets, and we're also seeing it in Bitcoin, where some of these risk-on assets are still outperforming the S&P 500. Now, with that being said, the ARKK ETF is still sitting right here at resistance. It has no bullish breakout until we get back over 41, so do look for that breakout back over 41 because that could send us back up to about 43. On a breakdown below support at 40, look for a retest of the support, which is down here at 37.7 and 36.5. On the VIX, we were up 6.9%, and the VIX is bouncing right off the 20 simple moving average and closing back over 30 yet again. Keep in mind the VIX is still making higher lows and higher highs, which means the VIX is still in a bull trend. While the VIX is this elevated, it's going to remain a very volatile market, and the bulls will want to start crushing the VIX all the way back down below 24 to start giving fuel to a bull rally. The bears want the VIX as high as they can possibly get it and more fear entering the market, so continue to be very cautious of a continuation of the bear market while the VIX is above 30. On Bitcoin, we're currently down 0.6%, and Bitcoin is still holding this bullish breakout look above 20,000, which was the break of the resistance trendline, and so far the backtest of that level as support is holding up. The next bull breakout will be above the 50 EMA and the resistance levels at 21,600 and 22,400. Above 22,000, we can start getting a bull trend of higher highs and higher lows, and the critical risk level for the bulls remains 19,000 because if we break below that, we're going to 17,000. On Amazon, we were down 0.54% as Amazon is struggling to break the 20 simple moving average of resistance at 121. Downside support will be the gap fill at 117 and the support zone right around 113 to 115. If we lose support, look for the next leg lower at 106. And to the upside, we could still go up there to test resistance and the gap fill right around 124 up to about 126. On Microsoft, we were down 0.97% as Microsoft is continuing to close back over the 20 simple moving average, which means Microsoft is starting to show some relative strength. I wouldn't be surprised to see a back test of the breakout and the gap close at 242, and we still have strong resistance to the upside at 252 and the 50 EMA at 256. On Nvidia, we were down 0.6% as Nvidia is starting to rally up towards that resistance trendline, and that is exactly where we found resistance today, which was just below 137. With this strong rejection from resistance, you need to be cautious of more downside, so set your risk right here at 130, and if we start breaking below 130, look for a retest of 122. If we get that bull breakout above 135 to about 136, look for the gap fill right around 142. On Tesla stock, we were down 1.11% as Tesla is very close to the double top price target of $231, which is now just about $7 lower. You could see a clear rejection from resistance today at 242, and we did close at another daily closing low, and we're still riding the lower Bollinger Band to the downside, so Tesla is still very weak and still in a downtrend while we have this confirmed double top. Now, if we hit the double top price target at 231 and get a bounce, you're still looking for resistance at 242, 250, and that resistance right around 259, and the full gap closes up there at 262.47. If we break down below the double top price target, the next downside target will be right here, right around 219. On Apple, we were down 0.66% as Apple has the second day in a row getting rejected from the resistance at 147, and we still do have downside support down here right around 142 and 138. If we continue to see the rejection from resistance, continue to expect the downtrend to continue on as we trend lower. But if we start breaking over 147, look for the next critical resistance at 150. On the financials, we were down 1.4%, continuing to get rejected from the 20 simple moving average and very likely trying to fill the gap to the downside. The industrials were down 1.15% today, still rejected from the 20 and very likely trying to fill the downside gap unless we do remain as an island reversal and see a continuation of the bull trend. The healthcare sector was down 1.28%, getting rejected from the 50 EMA and right back down to the support right around 125. The energy sector was up 1.78% today, continuing the very strong bounce and very close to having the full bull trend. If you're staying long on energy, set your risk right here at $79. So jumping back over to the S&P 500, remember these are downtrends until they're not, so be very cautious trying to swing long positions for any prolonged period of time, unless you're an investor that doesn't mind holding for at least 12 to 24 months. We should know very soon whether or not we are exiting the bear market or continuing into a prolonged secular bear market, So watch that critical level at SPY 358 and make sure you have a trade plan or an investment plan that is ready for any scenario. Q4 is typically bullish for the stock market, but all bets are off if we start getting black swan events, and the market can still go lower even if seasonality says otherwise. So always follow price action, and you can use seasonality as a guide, but you need to let the price action do all of the talking and only have seasonality as a backup plan. Also, don't forget I have Bank Trade Alerts, which is an algorithm-driven trade alert service that only trades the ETFs TQQQ and SQQQ and sends you all of your buy and sell alerts directly via email and text message. If you're interested in learning more about Bank or want to subscribe, you can click on the link in the description of this video. If you're looking to become a better price action trader, consider joining the Stocks Channel Trading Discord community, where you get access to all of my intraday updates and analysis. You can find out how to join the Stocks Channel Discord by clicking on the link below. So thank you for watching, everybody. I hope you're crushing this market. And as always, I'll see you in the next episode.